In the world of investing, the biggest profits are often made in moments of panic, and few stories capture that better than Bill Ackman's billion-dollar bet on Chipotle. Think about it, a company adored by customers, trading at record highs, suddenly falls into chaos. E. coli outbreaks, collapsing sales, the stock loses half its value, and Wall Street writes it off as finished. But where most people saw a sinking ship, Ackman saw an opportunity. He stepped in, bought big, and helped engineer one of the most impressive turnarounds in modern investing history. Welcome to Hills Equities, where we take deep dives into the moves of legendary investors. We break down the strategy behind the headlines and pull out lessons you can actually use in your own portfolio. If you're serious about becoming a sharper investor, you're in the right place. Before we get into Chipotle, let's talk Bill Ackman. He's not your average Wall Street guy. He's what's called an activist investor. That means when Ackman invests, he doesn't just buy stock and sit on it. He gets involved. He pushes for change, influences management, and sometimes shakes up entire companies. His hedge fund, Pershing Capital, has made billions doing this. But let's be clear. He's not batting 1.000. The man swings big. And when you swing big, you either hit a home run, or you break a window. And when it comes to Chipotle, that swing paid off, in a big way. Now, let's rewind to 2015 and 2016. Chipotle was the fast casual darling. People loved the brand. Fresh ingredients, customizable burritos, and a healthier than fast food vibe. The stock soared to over $700 a share. Then came the nightmare. Multiple outbreaks of E. coli and norovirus linked to Chipotle restaurants. Customers got sick, sales cratered, and the brand went from healthy to hazardous. The stock price got absolutely crushed, losing more than 50% of its value. Wall Street panicked, customers bailed. Chipotle suddenly went from the future of dining to a corporate cautionary tale, and this is where Bill Ackman stepped in. In 2016, as Chipotle's reputation was cratering, its fundamentals were still flashing opportunity signs, if you looked close enough, and this is exactly what Bill Ackman did. Let's look at the numbers. P/E ratio explosion. At the end of 2015, Chipotle traded at about 31x earnings. But after the crisis hit and profits collapsed, its trailing P/E ratio skyrocketed to an insane 460x by the end of 2016. Earnings implosion. In 2015, Chipotle brought in about $476 million in net income. In 2016, that number fell to just $23 million. A staggering drop, but importantly, this wasn't a permanent failure. Market cap contraction. Chipotle's value was cut almost in half. From north of $25, $30 billion, its market cap sank to around $11 billion in 2016. Now, most investors saw those numbers and thought, game over. Ackman saw the opposite. He quietly built a 10% stake, committing more than $1 billion. One of the biggest catalysts came in 2018 when Chipotle hired a new CEO, Brian Niccol, who had previously led Taco Bell. And say what you will about Taco Bell, those folks know how to get people in the door. Niccol focused on marketing, menu innovation, and digital sales. He leaned into online ordering, delivery partnerships, and the Chipotle app. Suddenly, Chipotle wasn't just the place that made people sick, it was the place where I can get a burrito delivered in 15 minutes. Sales recovered, digital ordering exploded, and the stock price, well, if you look at a chart, it basically went vertical. From under $400 a share at the low point, Chipotle soared to over $2,000 in the years that followed. That's billions in gains, and Pershing Square was right there for the ride. So what can we as investors learn from Ackman's Chipotle play? Let's break it down. Lesson 1. Crisis creates opportunity. When a great company hits a temporary crisis, the market often overreacts. That's when you can get in, if you truly understand the business. Lesson 2. Management matters. You can have the best product in the world, but if the management team can't execute, you're toast. Lesson 3. Don't follow the crowd. Everyone else was dumping Chipotle stock like it was radioactive. Ackman went the other way. Lesson 4. Patience is key. This wasn't a quick flip. It took years for Chipotle to regain trust and rebuild its brand. Lesson 5. Focus on fundamentals, not headlines. The news cycle screamed Chipotle is finished. But underneath the noise, the fundamentals told a different story. Answer those questions honestly, and with discipline. And you might spot the next Chipotle-style turnaround. Bill Ackman didn't just bet on burritos. He bet on human behavior, leadership, and time. If you enjoyed this breakdown, like, subscribe and turn on notifications for more deep dives from 7 Hills Equities.